afternoon, everybody. Welcome to TraderMerlin show for another wild day in our markets. Thursday wrapped up being what normal standards would be a monstrous down day, but when you combine it with the last 2 days, it's been like, okay, well, I'll still take a 5% overall jump to the upside for our equity market indexes. So it was a brutal sell-off. I didn't think we were going to see that much. As we talked about in yesterday's show, you guys all asked me, where do you think it's going to go? Well, I thought we were going to see it go up a little bit today as that momentum slowed and then start to sell off. I thought maybe we get 2 days of positive action. But the grand scheme of things, it's run a downtrend. I was actually on a friend of mine's show on KFI Radio. If you guys listen to KFI, Gary and Shannon have a great daily show there that they do every morning for hours. I don't know how I do this show by myself for 1 hour, and I'm exhausted. They do their show, I think, for 3 or 4 hours a day. Now, granted, they have a whole team and everything, but I don't know how those guys do it every single day. Anyway, I was on their show this morning just for a few minutes, and they were asking me about the markets. And I said, look, ultimately, how do I determine where the market's going to go? It's pretty simple. I said, the trend is your friend till the bend at the end, which you guys have heard me say over and over and over again. The trend's down. The trend's down. I see a lot of uncertainty in the horizon. So while I did expect to see a little bit more upside, slight upside, the bigger picture is more down. And yeah, I think you guys all know my position. My position on that. But you guys are saying, I'm exhausted after this show lately. I know. I'll try to keep it energetic and positive, not to be a Debbie Downer. But boy, I tell you what, if you were trading the markets today, you felt like this graphic here, which is more market whiplash. I've got a guy leaning against a wall that's got currency as the wallpaper and a pretty thick old neck brace there because it was a wild one. I'll dive right into what are some of the factors for it. And I was really surprised today because on one hand, you had some economic news that is, from a market perspective, epic. You would have this news, you go, wow, this is amazing. And what is it? Well, I'll go to my graphics here. It's all about data. Now, of course, we have two pieces of announcement this week, which is Consumer Price Index, which happened today, and we have the Producer Price Index, which happens tomorrow morning. And here is let's just start with the month over month. So, month over month is really interesting because it shows a significant drop in the rate of inflation. Expectations were we're going to drop from 0.2 to 0.1. And again, I keep saying this, if you annualize it, 0.1% is only 1.2 per year. That would exceed the Fed's expectations. And remember, if the Feds get to the point where they feel unemployment's under control and inflation's under control, now they have the green light to cut rates as much as possible, right? Just keep on drop. So this is a piece of news here where those of you who are thinking that we are going to see some rate cuts, this chart, to me, is one of those ones that the Fed's going to go, okay, maybe we can cut rates. Now, before we get too happy about this, let's break down what it was. Bottom line is it looks deflationary, and that's kind of what I tweeted out today in the description for today's show. We have prices actually dropping. Now, this is what Big Eb's going to point out here, which he has on a couple of shows. He says, yeah, you do have inflation dropping. And the numbers here reflect that. And the masses, this is why it's so important to know your craft and know what you do. The masses, meaning the average American who's watching CNBC, Fox, Bloomberg, all this stuff, they're looking at it going, yeah, inflation's dropping. It's dropping in one area. I think I actually have a tweet out. I have a tweet out that I posted on this one today, and I'll bring it up here for you full screen. And I highlighted it in yellow. If you look year over year, only one area in our entire component basket of CPI has been dropping. Now, okay, I know you're going to look at this where it says commodities less food and energy was down 0.01 year over year, adjusted 12 months. Everything else is all energy. Gasoline down 9.8%. What do we have? Energy commodities down 9.5%. You have energy overall down 3.3%. Fuel oils down 7.6%. So this is the only place where we are seeing a significant decline. And of course, there's many reasons for that. You could cite the trade war. You could cite the dollar. You could cite Trump's drill, baby, drill mantra, which I think certainly does play into it. But let's not get too happy yet because it's really only one spot has dropping prices. Now, I know some of you are going to look at the month of March and look down here at used cars and trucks. You're seeing seasonally adjusted for the preceding month was negative 0.7. Look, if we get tariffs to the extent which we are seeing, 25% for foreign vehicles and trucks, we'll start to see the cost for used cars start to surge as well. And that's one of those pieces that's actually bringing consumer price index down, is the cost of vehicles. If inflation starts to hit these new cars, you got to put yourself in that big choice. Are you going to buy a brand new car that's going to cost me 25% more that came from Mexico, that you really want it? Or are you going to go buy something used? You're most likely to go look at a used car. Now, those demand for used cars will rise, and we'll start to see prices pop up there. So this to me is, do I dare say it? I don't like making calls. I hate it because when I'm proven wrong, it's just like, okay, great. Like my 76,000 on Bitcoin call. I think for this year, all right, I'll make a little note on my little notepad over here. For this year, I believe that this is the last time that you are going to see a decline in consumer price index. I don't think, at least, I think you're going to see from now on. So we're going into, this is April's reading, so we'll go to May, June, July, August, September, October, November, December. The next 8 months, we're going to see inflation tick up. Now, I could be wrong. I might be. But I do think that this is the last time you'll see it tick down and go way below expectations here. The last couple times we were negative, when we have been over the past few years, was July of 2024. And then we saw consumer price index month over month drop in January of 2023. And then, of course, during the COVID pandemic. So this is a rarity. It doesn't happen often where we get to a contraction in prices on it. But when you have a weighted component that's so heavy like energy, it could certainly bring down that index. So don't get super excited. Of course, when you strip out food and energy, it still shows that prices are dropping, which on the grand scheme of things, fine, great, that's nice. But I still think, as some of you have pointed out here, I believe that data is manipulated. Now, let's go year over year, just because that's the real number that we look at and we think about. Here is the chart of consumer price index year over year. Expectations were that we are going to drop from 2.8%, which is not that bad, honestly, 2.8%. They thought we were going to drop to 2.5. We actually came out at 2.4. So this looks pretty good. And going back to my life mantra, the trend is your friend till the bend at the end, I think we'd all agree that from those 2022 peaks in consumer price index, it's still trending down. Even though the descent here is not as significant, it's still making lower lows here. So this does look pretty good from the inflation front, from the prospects of a central bank maybe cutting rates. Now, what are the odds? Have they switched? Man, I'll tell you what, this is just a yo-yo. Yesterday was 14%. We're going to get a rate cut in May. Now it's 24%. So we've increased quite a bit here. If you look at the end of the year forecast for rate cuts, I think that over the next couple of days, you can see this number really start to change because of that inflation data. If PPI comes out much lower than expected, then I think this whole thing's going to shift to the left here and the increased probability of rate cuts. Now, I still don't believe we're going to get rate cuts, but I think market traders are going to speculate that we will because inflation is under control. We don't have a problem with inflation. It's an inflation drop. Yay, everything's so great. Well, let's not get ahead of ourselves, folks. I think that this is still a to be determined piece of economic data. So that was your surprise anyway for me, is how do you have such a great piece of economic data and the markets just go, we don't care. Here's why. Because, of course, yesterday we had the 125% tariffs imposed by Donald Trump, and then he said, oh, well, I made a mistake. Now it's 145. China will undoubtedly, over the next couple of days, raise their tariff, and then so will we. At some point, we're going to get to a breaking point. Hopefully this breaking point comes in the form of discussion, where we fly to China or they fly to here, and we get together and we say, all right, let's work this out, because this is ridiculous, right? Who ends up paying for this? It's going to be you and I. So hopefully it comes to a head here soon. If I was Trump, I hate to sound like a jerk, but if I really wanted to force the issue, I'd just go 1,000% tariff. I'm throwing 1,000% tariff on you guys until you work it, until we come to the table and talk. I'll just take all your goods and services out of my economy. Now that would cause massive chaos if they didn't come to the table, but it certainly would push the issue. It's one of those things where if you guys have ever played poker and you both think you've got a good hand, you go all in. What usually happens is some guy goes, I'll raise 20. And then it gets the other guy and the guy goes, I see it, but I'll raise you 20. And then you raise 20. And then he raised, and it just keeps, like, can we just go all in? Because you're all going to get there anyway eventually. Let's just kind of, Yeah, Steven said if that happened, we would lock limit down for sure. we would absolutely lock down on the market. And we would certainly open down 7%. We would probably open back up after 30 minutes and drop to the 13%. The question is, do we get to the 20% mark in a day? I don't think so. Yeah, we'll see. And again, Trump has a tendency to just kind of do wild things. Now they're opening investigation into insider trading, as we talked about on yesterday's show, which I'll be honest, really should have happened. I mean, come on. Like, why? I have no interest in having a Truth Social account, but now I do, just to see if he tweets out something that I might be able to capitalize on, get into that insider trading if I'm a Truth Social member. All right, let me see. I got a whole bunch of comments came through earlier, so bear with me as I try to catch up here. And for those of you who are new, I know I have some new people that are coming over from KFI today. If you guys are new, hit that subscribe button and, let me know what things you like on the show as well, because I do respond and change things. Merlin, I like this shirt. Pigskin, Arkansas Razorbacks. No, this is not Arkansas Razorbacks. This is Charlotte's Web. It's Charlotte the pig over here asking if it's Wilbur, the football. So for those who can't see it, it's a pig on one side and a football on the other. And then the pig is asking the football, Wilbur? Because football is made out of pigskin. Anyway, silly shirt. I just grabbed that on my bin today and said I'm going to go with it. All right. Lisa, too bad my name wasn't Schwab. I know, I saw that today. Schwab did good. Steven said, I think you have to short every rally and use some stops as protection, but down is the key until China comes to an agreement. Yeah, Steven, and part of the reason one of the main reasons I agree with you, and I think you're absolutely right, is it's the uncertainty that's the problem, right? I think we'd all agree it's this not knowing from Monday to Tuesday what the heck is going on. If this continues, markets are going down, undoubtedly. There isn't any argument that you could bring to me that I go, oh yeah, that should cause markets to surge. If China doesn't come to the table and we don't have an amicable talk, things are going to tank. The key is, once these talks happen, or if there's a resolution from China and the United States on tariffs, how far does the market move, right? Does it have a colossal rally? It all depends on what the terms are. If we just agreed to a 10% universal tariff, right? 10% universal tariff, the markets would rejoice. And I think that we would see pretty significant market moves because now we've removed uncertainty. We've gotten that out of the way. And now we can start to calculate what those 10% tariffs might mean for this country or that country or for the United States and how our GDP gets impacted, right? Once you have the numbers in place, you can run the math. Right now, there's not a person alive that can run the math because the math numbers change every single day. Don't even try, right? It's all speculation. So, I think that if we do come to a resolution, markets could surge. And I mentioned it yesterday. I think it was Oliver or Michael G was saying, how do you trade this? I'm getting frustrated. Well, as I mentioned on the Gary and Shannon show today, we are no longer in that market that we were back over the last few years. Now, granted, we did have this one period of time from December 21st or December of 2021 through November of 2022. So a year where we made lower lows and lower highs. And that was a retrace or a pullback off the all-time high at that moment of 37%. I absolutely believe that we could see something very similar. I mentioned on that show this morning that I do think we'll probably see the market down probably about 30% this year. If we got the same sort of pullback that we got on... Oh, this is NASDAQ. Excuse me. I should have been on S&P. Let me change my numbers here. My bad. Let's go to there. So this is the S&P 500. And if I go from those lows in, it's really hard to get to snap. 27% slides what the S&P did. And that was from January of 2022 to October of 2022. So, 10 months. If we get that type of move off of the S&P, where does 27% put us? Well, that puts us somewhere down around, oh great, now it's all messing up on me. 27% would put us down around, I can't get this darn thing to work. I have no clue what's going on with my charts here today. But bear with me, guys. Apologize for the time delays. There we go, now it's fixed. 27% would bring us down to roughly 4,500 on the S&P. And that would be a similar drop to what we saw back here in 2022. And I don't see any reason why that wouldn't happen. As long as this uncertainty keeps going and people just have no clue exactly where it's going to go, I think we'll end up drifting lower and lower. So to Steve's point, and to Michael G, who's asking how you trade it, I think you short the rallies. I actually was really hoping we would have gotten a little bit more of a move up, preferably to that supply zone right around 5,700 on the S&P. Unfortunately, didn't get it today, so missed that one. I'm definitely being a bit more gun shy with regards to my size and opportunities. I'm really kind of, I would say, cherry picking, waiting for the right opportunities, opposed to kind of swinging. And it's just because you never know. You look at the way the market's moved the last couple of days. Actually, this week has been probably one of the most volatile weeks that most of you have ever experienced in the markets, albeit maybe COVID was intense as well. So haven't we been calling for the 4,500? Yes, there's been several of you who've been adamant about the 4,500. I still think until we get a close below that 49.26 level, I'm not worried about anything below it. I need a close below 49.26, and then I think it really starts to shape up for a much bigger downside movement. And again, the reason I'm saying 49.26 is that is 20% off the all-time high of the S&P. From there, you'll get government support. So I'd be very careful. Every time it'll get below this, you'll see the government do something. They'll say something wild. They do a quantitative easing. They'll do some printing of money. They'll do some action to stimulate the economy and get things back on track. It's just typically what happens. Why the hard rally to just sell back off? Because the average person, Michael, believes that the announcement made yesterday about a 90-day pause is an end. I think a lot of people thought that this is the end of the whole tariff war, and it didn't end anything. It just stalls it inevitably up roll for 90 days. So that's the main reason people had that big rally yesterday. I like I say, I thought we'd get maybe a couple days of more upside momentum and positive, but I think people at the end of the day just read up on it and realized, yeah, this is nothing. I don't even know if I would call it a Band-Aid, Oliver. There was no solution or resolution anywhere. It just said, hey, we'll do a 90-day pause on anybody who's coming to the table to talk to us. So you incentivize people to get your Band-Aid, but no Band-Aids have really been put on here. It's just, you just hit a little pause button for a couple of weeks, maybe 90 days if we get there. And in that 90 days, I do think you're going to see some, again, I mentioned this before, some of those countries will come to the table. Hopefully they're the bigger ones, the more economically impactful ones. If we get that, then I think, the markets will start to find a footing and stabilize. But it's really the EU and China are the ones we are the most concerned with. Those are the biggest. Those are the most important ones. If they don't come to the table and negotiate with us, then this pain will certainly continue on longer and longer and longer. Trump, you're welcome, Jamie Dimon. Yeah. Well, I think it certainly was an opportunity for those firms to clear their palate a little bit of some long positions, and maybe what we saw today. Let's run through some of those numbers here. It was brutal. Looking at the charts, and I'll zoom in so we can see really clearly the last week or two. Yesterday was just such an epic day, and then today on the Russell 2000 gave back 4.17% of it. Exact tie with the Nasdaq was also down 4.17%. So brutal. But let's be honest, I think everybody in this room is okay with the 4% down day as long as you give me 10% up days. I'll take that all year long. You give me a 10% up day followed by a 4% down day. Book it, Dano. Sign me up. I'm in. The question is, does this continue to move down? And again, I am in the camp of I do believe it will move further down. Maybe not to the extent of 4% slides here. But if Trump comes to the table, or if China comes to the table tonight and says, hey, we're putting on 120% tariffs on the U.S. And then Trump comes back on Friday morning and says, hey, we're going to do 200%. Then I certainly think you could be breaking below the lows that we achieved just on Monday. On the NASDAQ 100, your low is 16,460. If those tariff wars escalate like that, I think you could easily see this thing crash down below those levels. Crude oil was another interesting one today, down 3.66%. $60 a barrel. Let me read something to you. I wanted to bring on John Rowland. John's very busy, but I'm going to try to bring him on next week. And I asked him, it was a question that came from one of you about what's the cost of extraction for oil? And it's great. It's going to be a lengthy read. Podcasters don't mind, but you video guys are going to get annoyed because you're going to be staring at my face. Maybe I'll just put it over here so you don't have to stare at me. He says, estimated range between $60 and $50 depending on the region. Shale is more expensive. Permian Basin is cheaper. So like we mentioned, where that oil comes from is a big factor. Of course, labor costs and all those things. But he says right around $60 to $65. Okay. But of course, as John Rowland always does, he says, here's some fun facts. I love it. He says, 2 fun facts. Below $50 production will drop by 1% MBD inside of 12 months, million barrels per day. At $65, shale production will remain flat. But the kicker, shale wells produce 60% less oil inside of a year. That means that drillers need to drill to maintain production levels, but not if the price is below $65. And here we are at 60. So at some point, it's very interesting. If he says estimated range is between 60 and 65 to pull a barrel of oil out of the ground, we're at 60. Right? At some point here, these guys will stop drilling and supply will stop. Now, even wilder is knowing that Trump and the administration have been saying drill, baby, drill. So in an expectation here would be we're going to get more drilling and more supply in the marketplace. But 50 to 60 seems to be that price point. Now, he says, so to answer your question, highly unlikely that oil will fall to $40 like Goldman Sachs says because supply will rebalance to the near future price. So anyway, I thought you guys might like that. That's his long-winded, actually it wasn't long-winded at all, but answer to crude oil. Now, he did mention the $40 strike price. So let's zoom out here. I'm going to put on a weekly just so I don't torture us with zooming in and out all the time, as I tend to do on TradingView. There's your chart of crude oil. And of course, it's all screwed up because this low we saw back here on April 20th, 420. Convenient was on 420, where we saw a negative $40 print on oil, which I don't think we will ever see again. But let me move or put a horizontal line right at $40, just so we can have that as a reference point for some of the discussion here. Put that right there. That's a red line, so let me change this to a, how about blue? We'll go nice blue, or whatever color that is. I'm assuming that's blue. So there's your $40 horizontal line. You know, from current price levels to get down to $40 would be a stretch. I mean, it certainly would be a pretty significant slide to get there. That would be roughly a 35% decline from current levels. So you'd have to have a lot of market panic here with regards to crude oil to get it down to that $40 mark. But at some point, it will find a bottom here because the producers are just going to go, I'm done. I mean, I made the joke, actually not the joke, I made the statement about the United States and the penny. Penny cost like 3.5 cents to make. They should have stopped making the penny decades ago. The moment it cost more than 1 penny to make a penny, you cease production of something. That's just good business. Now, of course, we know the government is a poorly run business. However, if you're an oil producer, you're Exxon, you're Shell, all these companies, and it costs you, let's say, $60 to pull it out of the ground, I'm having an internal meeting today. I'm saying, look, guys, light crude, 60.07. We were down to a low point today on crude oil of $55.12. That means that for every barrel that we sell, we're going to be losing money. I'm out. I'm going to stop production there. So at some point here in the near future, and again, I'm not the oil expert. I rely on people like John Rowland and other commodity guys that know these numbers way better than I do. You know, we'll get to a point where I thought I saw someone in here post it. Stephen Wolf says, I really like going long at 53.50 on the futures. Yeah, there's going to come a point where you're going, I'm a buyer, right? Commodities, in my opinion, very different than publicly traded companies. I don't think anyone here would make the statement that oil can go bankrupt. Or we're going to stop using oil altogether in the next 30 days, right? Not going to happen. Absolutely not going to happen. Do we get big swings? Sure. You know, if we ever got down to a negative level like this, you got to be really careful with crude oil futures. Remember, crude oil futures is deliverable. So this is the reason why we saw this negative $40. It's just insane to think that they couldn't give oil away. They were literally paying you to take it because they didn't have storage for it. If you just held like USO, I saw a big up one at USO or UCO, right? This is what I was buying back then when that thing hit. I tried to buy, I didn't get USO, I got UCO, all right? USCO is double. Yeah, UCO is double. I was fortunate enough to get UCO as we went that lock limit down that day, and I sold it a couple weeks later. I had a great profit, and of course, I'm regretting that I didn't, hold it all the way because split adjusted, that thing was $3, and now it's up over 20. So there are instruments that you could use to capitalize on this sell-off in crude oil and hold for the long term. I would not do UCO. Again, see it says Pro Shares Ultra. This is a leveraged long instrument. I wouldn't do the leveraged longs. We've had this conversation over the past couple days just because they decay over time. And if you're playing oil, it could stay down for a while, especially if Trump does do what he says he's going to do, which is remove regulations, get more drilling going, open up national parks or lands to drill on. That could bring more supply. And that might drop the cost per barrel, right? Because some of those regulatory obstacles that these drillers have to abide by, some of that maybe go by the wayside. And that means there might be savings passed on to oil and gas companies, which that should help their profit margins for sure, but also lower that cost per barrel and kind of change that dynamic of where is that break-even point. So anyway, I wanted to make sure I got you the answer there from someone who's far more knowledgeable than me. That was John Rowland of Bar Chart. And guys, if you haven't had a chance, you can always follow John over at barchart.com. Just tell him I sent you. Of course, most of you guys know who he is and follow him anyway. I wish I had a trade then. I just started dipping my toe in there. Well, hey, Garfield, anytime you start trading is the right time to start trading. We've talked about this many times. Don't look at something in the past and go, man, I wish I would have done that. There's 3 words that mean absolutely nothing. Should've, could've, would've. Hopes and dreams, don't worry about that stuff. Just focus on the path ahead of you. The only reason, if I go back here to this crude oil chart or anything else, let's go back to gold. The only reason that you're even looking at anything other than this first candle is to see if there's any patterns, to see what the trends are, to see where things may be going, right? This is a reflection of sentiment, of emotion, of buyers, sellers, greed, trauma. This is, people like, oh, I watched Gone with the Wind, or I read Moby Dick, or, I'm into romance now. This is the ultimate novel. It's crazy how my brain, when I look at this price chart, I know this is not, some of you aren't thinking like this, but the way that my brain works is I see the story being told here. Yeah, the gold chart is real pretty. And I've been saying it for many, 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 many months now is you got to stay long gold. You got to stay long gold. I mean, that's back when we broke 2000 saying, stay long gold. So there we go. Steve says, I laughed, I cried. Yeah, I've done it all, buddy. Done it all. These charts, these charts are, it sounds weird, but these charts have become an integral part of my life. This is not just what I sit here and talk with you guys about on a daily basis, but these are trades. This is money. This is wealth growth or evaporation, as some of these trading weeks have been. This is how I'm trying to grow my net worth. I'm not creating a new rocket ship that takes us to Mars. I'm not creating some crazy new innovative product or service that changes the world. I'm trying to capitalize off people's fear, greed, emotions, and trends on price behavior. It really is what it is. So I know a lot of people have a hard time, figuring out what trading really is. I'm trading people's emotions, really. I mean, if I go and buy NVIDIA, which I am long NVIDIA right now, if I buy NVIDIA, it's like, yeah, sure, I'm buying NVIDIA because I think it's a great company, but I'm also buying NVIDIA because I believe that their technology is going to change the world, and that will bring in more buyers, and that will drive the price up, and I make money off it. Chris, it's a great question. He says, so when you sleep, you don't see sheep, you see price charts. I don't really sleep very well. Unfortunately, I have pretty bad insomnia, so I don't usually remember my dreams. I don't really sleep well. What's weird is I remember tossing and turning all night, and I guess I'm sleeping, but just remember that. I don't know. Kind of weird. Jeff says, look at the silver futures. Yeah, let's look at old SI. Let's do SI. Let's go futures. We'll go to the silver futures, which has been crushed in this big sell-off here, but now all of a sudden starting to stage a little bit of a comeback. I am definitely bullish silver. I do think silver is poised, like gold, for long-term growth. And, I think that there's a bit more utility that comes from silver as well, which means there's more industrial applications than gold. So, yeah, I'm definitely bullish on silver. Plus, I always like that it's cheaper than gold, so you can buy a lot more of it. You feel like you're really wealthy. Trend-wise, though, what do we have here to discuss with silver? I'm looking at this chart, and we were on a pretty rocky uptrend. It was making higher highs and kind of sticking to a higher low, even though we were breaking some of the minor term swings. Now the big question is this big sell-off that we saw, is that your stabilization point? Is that knee-jerk reaction that brings us back into silver at much lower prices? And I tend to think that it is. I tend to think that it is, that now would be a decent time to be buying some silver. And I don't have any silver SLV exposure. I own physical silver. As I mentioned, I just bought a bunch, I think about 20 ounces of silver bars from Costco a couple weeks back. Probably should have waited. Probably should have waited. But I did buy some at Costco. But as far as SLV or silver futures, SI, I don't have any of that right now. I have done a lot of put selling on SLV. So let's go out and look at SLV here. I would have been selling, because I know the way I trade, I would have been selling the $26 strikes on SLV, or maybe even the 27. Yeah, 26 would have been where I was going on this big sell-off here, and collected a lot of premium. And if I got it at 26, then I'd be fine with that. But right now, with this little rally up, do you start selling those 27s? Can you get enough premium for 27s? Maybe go for, the 30 days out and see what premium you can get there. But yeah, I am a fan of silver, and I do think over time you'll see silver go up. The key is, like this chart shows, is finding those opportunities when things drop. We talked about it with Tesla and Nvidia and Google and Amazon. If you find a solid thing that you like, that you believe in, buy it cheaper as often as you can. All right, let's see. Let's see. So you have to learn how to laugh at the. Well, I try not to laugh at funerals. I don't want to disrupt the crowd there, but. Cry at weddings. As I have some friends that say, weddings are funerals. Oh boy, that's just terrible. Sorry for all the married folks out there. Getting more sunlight can help sleep problems. And Martin, I live in Southern California, and I get quite a bit of sunlight. I also have vitiligo, which makes sunlight bad for me. Oh, yeah. Big Ed says, uncertainty is good for silver, but a slower economy threat knocks it back a bit. Yeah, exactly. And that's where those two things separate. If the economy slows down, then the applications for silver means less demand for silver, whereas gold is that constant flight to gold. So in those two, I would certainly have more gold. But I've been adding to my silver position, my physical silver position. I haven't bought any gold coins in a while, but here we go. Okay, what else did we want to discuss here today? Let me see. What do you guys have questions on? I have it on super high latency. Have you guys had any problems with our stream lately? I have it on ultra fast, which means there should be almost no latency. So I guess in looking at the stream right now, it says I can't stream at 4K, which is great because no one needs to see me like that. Good. I'm glad there's no problems. I check before I select your latency for you guys, I check my speeds, and I was at like 400K today, so it's great. I love that we have the low latency. It makes for much more quicker interaction as opposed to waiting 30 or 40 seconds. So I'm really happy about that today. All right, let me keep going up our list here then. Let's go to, we've gone through the two majors here, which is NASDAQ and the Russell. We talked about crude oil a little bit. I do think that the rally up here in crude oil could bring us back up to that overhead supply we saw. Well, it was demand, which is right around $65. I think you could see a rally up there, but then continuing back to the downside. Now, here's the big daddy. It's the S&P. S&P is a biggie. We had that huge rally yesterday. I did think we were going to gap up a little bit. I was right there, I guess. We did gap up a little. And I thought we'd drift a little bit higher and then sell off the second half of today. Well, I guess I was wrong if you look at the grand scheme of things. Because really, if you look at our chart here, there was... Hold on a second. We started a rally up here. That's the 9th going into the 10th. No, we actually gapped down on that one. So I'm sorry. Yeah, we ended up gapping down on it. So we started off on a weak note. Got much weaker by midday, and then started to crawl back up here a little bit. So that was a good thing. We're trying to get our feet back on our ground in a little bit, not the major decline that we had at one point. Still not looking great, but I certainly would like to see a nice positive Friday go into the weekend with a little bit of optimism and allow me to sell some puts at higher, or sell some calls at higher prices, just so I could get some more premium there. That said, I saw a comment earlier on, right at the very beginning of today, which was talking about how you're nervous about, I think it was from Steven, talking about he's nervous taking things home over the weekend, and I can't blame you. This is one of those markets where you're probably better off just closing things out and not taking anything home over the weekend, just because the uncertainty is way too strong. Look, if this table was reversed, and let's say we resolved our tariff issues with China and Europe and the UK and Japan, and that's all good. But now it's like, it's Argentina. It's Brazil. It wouldn't have as much of an impact on our markets, and then you could kind of alleviate some of that uncertainty and pressure and be fine taking something home over the weekend. But because it's such juggernauts out there, that's where the problem lies. So I think you're right. I think, I don't think anyone really wants to be long over the weekend. I will be, well, it depends on what my positions do. I will probably just have 2 positions over the weekend, which will be MicroStrategy and SMCI, and those I've been holding for months. And I've had MicroStrategy for, I think it's like 2 months now, and every week I'm collecting anywhere between $1 and $8 worth of premium for a week on MicroStrategy. So I'm lowering my cost basis significantly, considering that my first 100 shares that I bought was $352.50, then I had a $350, then I had a bunch of $320 purchases. So yeah, I'm underwater on all of those positions, yet with the premium I've collected, I'm actually positive on the 320s. I still have a little bit of way to go for the 350s. Gotta love dollar cost averaging and lowering your cost basis. I don't close all my swing trades. Well, and again, those ones you just have to be careful with, Garfield, right? Knowing that this market, a tweet can change everything, as we witnessed. The last 48 hours have been really one for the record books. It was really just been such a shocking turnaround, both to the upside and to the downside. But, for experienced traders, you got to shrug your shoulders and go, it is what it is. I expect it to continue. I do expect this to continue more and more. Let's see. Martin says, also for sleep, light exposure just needs to hit the retina, not the skin. No. Okay, there you go. I like that. No, I never stare at the sun, my friend. I got one good eye, one bad eye. I'm not going to ruin them both. Toby says, I'm holding lots of bags and now using them build a cabin for my living. That's a different kind of bags, bud. OPEC Plus is here. They're asking where... Oh, yeah. So we did have OPEC meetings. Again, OPEC is one of those ones that at any moment can be just disastrous for the price of crude oil. Now, I mentioned this a while back that if I'm OPEC member, I want my price as high as possible. I want to get as much money for each barrel of oil because many of those countries, like Abu Dhabi or Dubai or smaller ones, they have limited oil. It's not like this infinite well that they can keep tapping from. It's running out. When I was in Dubai, I think they said they had like a 50 years worth of oil, and that was at least a decade ago, probably 12, 15 years ago. They know they only have 50 years worth of oil. So they're building infrastructure in Dubai so that when this all runs out, they've got an economy going. But I want as much oil or much money as possible for each barrel of oil that I have. For me, Tesla is my money maker on covered calls. Nice, Jay. And look, if you're trading anything in this list here, and I've got the Magnificent 7 list, pretty much anything in this list is going to have very high premiums and generate you a lot of option premium. So that's why I think if you can find something at a nice deal at a discount, like you see Tesla down here, I mean that's a phenomenal deal. Meta was a couple days ago as of Monday, just an unbelievable deal. Same with Nvidia. If you can buy something and then be selling calls against it, I think that's the way to go in these markets. Now you will get to a point where you buy something and you're long, and now it continues to fall against you. Well, the question is, do you put a stop loss on that position? And this really depends on each individual person. I have different rules for different accounts. In one account, I can continue to hold it for however long I want. There's no stop loss on them. And the reason is, in that account, I will continue just to sell covered calls against it as it keeps dropping and dropping and dropping. Knowing that this is a good company, mind you, right? Knowing this is a good company, over time it's going to rebound, and hopefully during that time I am selling premium and lowering my cost basis all the way down. And then in a perfect world, as it rallies back up, I don't get it taken away from me. I'll probably close those out and roll it into something else at a higher strike price. Another big notice for the dollar getting hammered today. We're almost there. Almost there. I was working my way up my list of markets today, and it was close. We had to talk about Bitcoin first. We talked about the S&P. Let's talk about crypto. There was one thing, and I saw someone mention crypto, saying there was no help from crypto. Unfortunately, there you go. Steven says, crypto is getting zero help from the crypto reserve. It's zero help. Now, the good news here for anyone who's a crypto supporter and fan, as I am, and I'm getting crushed on my crypto, is Senator Loomis met with the SEC. Her name eludes me right now, but she is a huge proponent of crypto at the SEC. Remember, Senator Loomis is the one who's trying to push through the Bitcoin Strategic Reserve bill. Not what Trump did, but the bill that says, here's how much we're going to buy over time and all of that. It sounds like that's getting more and more traction. The big question is, where does the money come from to buy all of this? Bitcoin, that's TBD, I believe. But it does seem like that's gaining some traction, and if that does go through, I do think you'll see the next big catalyst to the upside. Otherwise, it's head scratching why it's not moving up. One of the other things here that we need to discuss. Well, let's get to the dollar index and then the 10-year, and I'll dive deeper into this. Let's go to the dollar index. We'll revisit crypto in a second. So we drew this level out here on the dollar index, which brings us very close to just 100 even. It's basically $100 and 0.25 or 100.6. That is that next area, which is really the bottom for quite some time. It's really been a couple of years since we've been down below that level of 100 on the dollar index. And we came racing towards it today. We're at 100.98, a 1.87% decline in the purchasing power of your US dollar today. So that sucks. Do I expect it to bounce here? I do. I do expect it to have a bit of a bounce there. We came really close to it. Its lowest point today was 100.7, and the zone that I have drawn here starts at 100.58. I'll run it to 100.6. So we're super close to it. Some may even argue that was the tap today that we had for the dollar index. Absolutely getting crushed. The trend still is to the downside. From the peak to where we are today, let's give you a percentage decline here in that purchasing power. We're talking a decline in the US dollar purchasing power of 8.34% in the last 63 days. That's not good. That's really not good. I mean, it's great for businesses domestically, right? Foreigners can buy more goods and services, but now we set up all these trade wars. That might be negating that one anyway. Steven says, the dollar sinking is not going to help the inflation numbers going forward. Correct. Right? What this means is you have more people being able to buy goods and services in America. So if you are Europe or some other country that, I guess, the trade tariff part is going to be the interesting one. But in theory, they can buy more of our goods and services, which drives the price of those goods and services up, which means inflation. So yes, the weaker that dollar goes, the more it would attribute to inflation. So this is not a good sign. Owen says, Forex is rocking. There's a lot of big moves happening, and I'll maybe have to start looking more in Forex here on the show. I usually don't cover it as much just because we have so much other stuff to talk about. Now, let me dive into one more thing here. That's that 10-year. So we talked about that 10-year bond selling off, and this is exactly what Trump wanted. He wants a lower yield. He wants money to be readily available and cheaper for businesses to expand and do all that. However, he has, pardon my French, pissed off China. And China is one of the largest holders of U.S. government bonds. So what's happening is China is unloading their U.S. government bonds. This is a very strategic move. How do you hurt the U.S.? You dump your government bond. You dump your U.S. bonds. Because you guys you could tell me this question. What happens to the yield on bonds if you flood the market with bonds? All right, so let's say I've got 1,000 bonds for sale and the yield's, I don't know, making up a number, 6%. If all of a sudden there's 20,000 bonds for sale, what's going to happen to that yield? What happens to the yield? If we have a huge influx of sellers selling their bonds, yield goes up. Prices of the bonds drop, but yields go up because in principle, if the government is selling new bonds, they're going to have to offer a more attractive rate. They're going to have to offer a higher yield. They're going to pay more. And that's what we've been seeing here, or it's really since this whole trade thing started. You go back to April 2nd, it sold off for a couple days on the yield. And now all of a sudden it's surging. Why? Because China's going, well, screw you. We are going to unload our bond portfolio. So it's causing these yields to surge. And remember, they were patting each other on the back for a few days going, yeah, look how the yields are dropping. We're paying back our debt with cheaper interest. Yeah, this is great. This hurts us. This is not a good thing for the U.S. markets. That means that the cost of capital is getting more expensive. That's exactly the opposite of what Trump wants. So this is, I'm sure Trump and Bessent are like, dang it. Why? This is not what we wanted, man. Son of a biscuit. My T-bills like that. Yeah, exactly. Yep, your T-bills like the selling. So, if you are holding long, well, not the current T-bills you have, but the new T-bills that you're buying, right? The new issues will be a higher yield. The bonds that you own are going to pay a certain rate for whatever 3 months or whatever term you got them. The new ones that you be buying are going to offer a higher yield. Yep, absolutely. So yeah, this is a pretty big story. If China continues to unload those bonds, this is another monkey wrench in the whole machine of global economics and finance that is yet to be determined its impact. But it's not usually good to have a surge up in yields like this. Not usually very good. All right, and last, we already talked about gold. Gold, doing an about face here. Typically, things move faster to the downside than they do to the upside. And I'd make the argument that gold is moving faster to the upside here these last 2 sessions than they were to the downside the previous 3. Looking really good. Really good. Big Eb says 4, 8, and 13 weeks are all I hold. Great. Are you doing a ladder? You're just kind of rolling them out as they go? Makes sense. Smart. You've got pretty safe money ranging from 4.3 to, let's call it 4.9%, depending on the week. You definitely get better yields. Let me see if I can bring them up for you. ELDS today. We'll bring up that chart. I think the Bloomberg has a really cool page where you can see them all. There we go. So there's your 4.3, 4.1. Oh, actually the 2-year has 3.8. That's interesting. That 2 years 3.8 and the 10-year is 4.4. So that shorter term stuff, you're getting about 4.25, 4.3. Not bad. Good stuff. Yeah, I mean 4.25%. And again, just so everyone understands, that's not for 4 weeks. He's not getting 4.25% for 4 weeks. It is 4.25% annualized, but still, in a market with tremendous uncertainty, it's a great place to park your capital and get some yield on it. You can go out to some banks out there. I mean, I think I still have an Ally. Oh, no, I moved my Ally account. I closed it out and put it back into trading. Yeah, with things like Ally, you could get, I think it was 4.2%, and they might be slightly lower than that now, just based off what's been going on. But I don't have the rates here in front of me. And as Big as says, and no state income tax. That's a nice one. Nice little added bonus there of 10% savings on your gains, right? Let us see. All right, so that was most of the topics you guys asked me for on that one. There was something else that came up just a little bit ago. Something else you guys asked a while ago, but I can't remember what it was. Yep, Treasury Direct is a place you can get them all for no cost. All right, well, I guess I'm gonna have to wrap it up. So tomorrow's a big day, folks. We talked about the economic calendar. CPI was important, and I think CPI, from my perspective, is more important than PPI. But tomorrow, really, it's all about the U.S. You can see producer price index comes out 1 hour before the markets. There is this preliminary University of Michigan consumer sentiment report and inflation expectations. That's one that I think gets a lot more press than it should. It's not that important in my opinion. I haven't seen it really move markets, but that also happens. That will be 30 minutes into the trading day. And then really the big story is earnings. So let me bring up your earnings calendar here so we can have that one all ready to go. Earnings season kicks off. That's it. We're starting. Finally. Get us something exciting to focus on other than politics. You can see we've got JP Morgan, Wells Fargo, Progressive, Morgan Stanley, BlackRock, Bank of New York, Mellon, a lot of big banks reporting tomorrow. And again, from market cap perspective, $600 billion, drop in the bucket. These aren't even $1 trillion market caps. Well, JP Morgan is that juggernaut, JPM. And even though they're just this giant financial firm that runs the world, as many think, still not doing that great from a gain perspective. We're down 19% over the last 37 days. If you go back to Monday's low, this thing was down 27%, which in my opinion created a great buying opportunity. But JP Morgan has been on just a phenomenal uptrend here. Pullback was certainly due, in my opinion. And this will give us clarity as to what they've been doing, how their numbers look, and where they may be headed going forward. So keep your eye on JP Morgan tomorrow. That's going to be before market open, and to me, that's going to dictate what your Friday trading session looks like. That and the PPI numbers. I don't know the percentage weightings of gas. I just know that they give you a table of energy prices, and I had it up there earlier. I don't remember where I put it. Oh, it was on Twitter. They give you kind of a breakdown of how these different components impact the market. And I had this chart here, this one for you. It doesn't tell me what percentage weightings. I did have a chart, which I don't have it right now. I had it in the past, but I'll see if I can find out for you. It's definitely one of the higher components, Les. I think it was the second most weighted component in the calculations here, whether it's core PCE price index, which is the better inflation data point, or PPI and CPI. They were slightly different, but energy was number 2. Housing was number 1. Housing was the number 1 component, at least from a weighting perspective, last time I checked, on CPI and PPI and core PCE price index. So we'll see tomorrow what the PPI numbers look like, and if I get a chance, I'll bring up that percentage sheet for you, see if I can find it, Les, because I did have it. I used it on the show once where you could see the breakdowns on it. Let's see what else we got. It's going to be big tomorrow. There's a new forecast. Yeah, it's going to be wild. I just say be really, really careful tomorrow. That CPI, I'm asking about PPI. Oh, I'm sorry. Yeah, I don't know what the percentages of it are. The forecasts are, let's bring it up here for you. The forecasts are that we're going to be lower than expected. They're thinking it's going to drop. Where did my, oh, maybe I did it here. I did it on Forex Factory. So let me bring that up for you guys here. We'll go back to Forex Factory. PPI is expected. Oh, I take that back. I'm sorry. I thought we were supposed to go down. You were right, Les. Right now the expectation is 0. We are at 0. That's what we had last month, was 0. Expectations are we're going to come out at 0.2. So they're expecting the producers to bear a little brunt of cost increases here. So producing price index is expected to increase, yet the consumers are expected to drop. One of those two things is going to give, right? If you have producers paying higher prices, that gets passed on to the consumer at some point. Just basic economics. If we have consumer prices dropping, then maybe we see the producers, profits increase a little bit. But yeah, either way, if the expectation is right now that PPI number is going to increase by 0.2% for the month, at some point that's going to get passed on to the consumer, which does support my argument that we're not going to see inflation go down on CPI numbers for the rest of the year. I think we're going to see a continuous stair step up for the next 8 months. Anyway, long shot statement there. I have a couple extra notepads up here. I brought one up to write down my forecasts on my calls. I'll put that one on there right now, that we're not going to see inflation decline on CPI for the remainder of the year. No more declines. It's all uphill from there. All right, everybody, that's going to do it for me. For those of you who are new, hope you enjoyed it. If you did, hit that like button. If you're brand new, hit that subscribe button. That makes it even better. If you have conversation pieces, things you want me to look at, chart. Oh, by the way, one more thing. I got to give Jeff a little shout out because he sent me this one. Where did it go? I had to share it with you because I thought it was pretty darn funny. This is from Jeff. Sent me this one. It's a, I guess this is the thing going around right now where it's like an action figure. And it's got something funny. It says, Market Maker Merlin, Master of Markets, Conqueror of the Close. I like it. That was pretty good. I thought that was very, very nice of you. I got my little laptop there, some charts. I like that I've got a bottle of whiskey. Fantastic. And I got a glass of it. I look very dapper. I think the action figure you put here makes me look a bit too handsome. I look a little too handsome there. I mean, I appreciate it, but I'm not that handsome. But I do like it's got the cufflinks, got the glass of whiskey. But yeah, these are going around right now. It's pretty funny. You let me know where you got that. I want to play around with it, see if I can make it a little more like me. I got to have more of a receding hairline and maybe more crow's feet and vitiligo. But anyway, thank you very much for that, Jeff. That was pretty funny. You made me laugh for the day. But you could aspire to be that. I can't, Big Eb, because I refuse to do plastic surgery. I am not in the camp of augmentation or plastic surgery or lip fillers or none of that stuff for me. And I'm going to go with whatever plan I was given, and I got to deal with it. So it does look like Epstein, right? Louis says it looks like Epstein. It does look like Epstein. That's why I'm a little bit uncomfortable with this one, Jeff. Thanks a lot. You made me look like some creepo. No, I'm kidding. Anyway, I appreciate it. It was fun. Maybe I'll try to go find this and make some on my own. Anyway, if you guys have something you want me to talk about on tomorrow's show, certainly we're going to talk about inflation. I'm optimistic that we might get a little move up, but right now the momentum, it just seems so negative, but you never know with this whiplash type of market. Hope you enjoyed it. If you guys have something else you want to talk about, as always, let me know. More market whiplash is certainly in front of us. That was our show topic for today. I will see everybody on tomorrow's show. Take care.